Getting ready. Preparing to live stream the meeting. Okay, we are live. And let me go back to where I was. Okay, technical difficulties aside, we are back with Pat McMasters with Price Mortgage. Pat, how the heck are you?
Doing good, Rick. How are you?
Interesting week. Interesting week. I wanted to get you on because last week, we were talking about interest rates, doing this, and we kind of thought that rates would come down a little bit more this week, although that seems really strange to say when we're sitting at 3.38. I mean, that's a great rate. So, I mean, what are we waiting for, right? 3.25 or just 3. But so rates look like they just kind of stabilized. So tell me what you were seeing from your end.
Yeah, I mean, they have. I mean, I think the biggest thing is that I'm going to show you this chart. I'm going to flip it around here and show you this chart on my computer screen here. Can you see that?
Yeah.
And basically, I guess since we can't share it, this is where back over here, you see my mouse?
Yes.
Rates were going up, rates were coming down. It was a very stable market to lock. And then right here, there's an alert. It says alert to lock issued at 11:53 on March 9th. And that's when basically, excuse my French, but all hell broke loose. And from there, rates went up. This, even though this is corresponding, this is the price of bonds, and bond rates and yields have an inverse relationship. This period right here, this 2-week period, basically from March 9th to about March 23rd, was just chaos. I mean, this is when rates were moving a point and a half in the day. Now, these big movements in the bar means that, and right here, these are terrible days in the red. It's absolutely terrible. These were good days. And then the Feds started coming in and they said they would start stabilizing the market, the Federal Reserve, buying mortgage-backed security markets. You see that right here, pretty consistent, nice flow. Here, just chaos. And right here, you can see even though there's some movements, bigger movements, you can see how this is there's not as big day-to-day, intraday movements in the rates. So from about March 23rd, 24th to now, it's been more of a steady, stream. Rates actually should be, if they're right about here, they should be even lower. But what has happened is that the lenders have been shell-shocked because of this right here. Yeah. So now what they're doing is they're not lowering the rates probably like they should be, because like I said, this here has caused a lot of turmoil in the mortgage-backed security market. There's a lot of hedging losses. People were moving locks. It was just chaos. So now we've got more of a stable market. So I'll flip it back here. So I think, rates have stabilized. I think they're going to be stable here for a while. The prediction is everybody's saying that they're going to probably go a little bit lower, but, everybody's got to take a look at their own situation. Like you had talked about before, if you can get a rate of say 3 3/8, 3.5. If they do go down to 3 1/8, 3 1/4, they probably will get there, but how long before they do get there? So,
well, the other thing I was looking at too is I was looking at an article just this morning, and I'm gonna pull it up here and see if I can show it to you. But it shows on Market Watch here, it says mortgage rates are near record lows, but home buyers may face an uphill battle in securing them.
Yeah.
So let's see, my screen's not showing there, is it?
Yeah, it is. I can see it.
You can see it? Okay.
Yeah.
So so are loans getting harder to get? What changed?
Yeah, there is. I mean, bottom line is, yes, it has. You got a lot of talk about the forbearance. That's another topic, but bottom line is, if you can make your payment, make your payment. A lot of people are saying they can, delay their payment for 6 months, 3 to 6 months. You've got to be careful, because even though, I was reading something today, and this is the thing is, there's a lot of misinformation out there. So you've really got to just, be careful, just be careful. But on the forbearance side, yeah, you might, they'll delay your payment. And they supposedly said, what I've read and research is that the credit reporting will not negatively report you, but there will probably be a note below the trade line on your mortgage. It says forbearance, was in forbearance. And looking into the future, obviously, this could have some consequences for somebody looking to refinance or buy down the road. I'd be a betting man that it is going to have consequences if you have a forbearance on your credit report, even though you don't have a negative reporting on your credit report. And my biggest fear was that these lenders were going to report negatively, which obviously but who knows? I mean,
well, there's all kinds of stories going along about forbearance, because now just to back up a little bit. So it's Congress and the Senate comes in and says, okay, we're going to let you, do forbearance, which essentially in what they thought would happen would be that, let's say I can't make 3 payments. Well, we're going to take those 3 payments that I couldn't make, and we're going to tack them on to the end of my loan. So it doesn't change the balance or anything, it just postpones them. And so people were calling their bank and saying, hey, tell me about the forbearance. Can I have 90 days of forgiveness? And the banks were saying, that's providing you got through after about an hour and a half on the phone.
Yeah, that's the thing.
They're saying, yeah, great. Here's how it works. Those 3 months. So let's say we don't pay April, May, and June. July 1st, you'll have July 1st due, and April, May, and June. Well, that's not the kind of forbearance people think they're getting. It's what happened to sticking it on at the end? Well, then on the 8th, which was Thursday, the Federal Reserve came out with kind of a nasty note that they sent along to bankers and lenders and said, look, you're going to have to act in good faith for the borrower. And we don't want to have to come in and interfere with you because you're not acting in good faith. So he's saying the program is designed to where you guys need to take those 3 months that the consumer didn't pay and then put them on the end. Well, that all sounds fine and good, but then here came along this other issue. And this is where I kind of need some clarification. So here I am, I'm Rick, the borrower, right? And you're Pat, the mortgage loan company. And then over here is the investor, right? So if I don't pay you, he doesn't get paid, right?
Yep.
What happens when that happens?
That's the $1 trillion question. That's what they're trying
the canary
to
in the gold mine.
That's the canary in the coal mine. Exactly. I mean, that's the problem, is if those lenders don't have that money, that's the underlying part behind what people don't understand is, well, if I don't make my payment, the bank's got to obviously, they've got people to answer to, the mortgage, the servicers. So it all trickles down, and somewhere it's going to stop. And that's where it stops, is where you're going to have the liquidity issue. And that's what the feds are trying to give a facility to these servicers that have to, these lenders that have to send monies to the servicers to kind of bridge the gap. And that's why everybody trying to make their payment, believe it or not, is going to help the whole, the whole market,
But this week, wasn't there this underlying risk that the investors and some of these agencies throw the loans back and make the brokers buy the loans back? And so smaller brokers can just go belly up in a day, right? I mean, oh, you owe me $4 million.
Yeah, exactly right. I mean, well, another thing is too, we just got a disclosure that we have to put out from our company at Price Mortgage that's saying that, if you just did a loan here recently, that you will not, you'll call your servicer, you will not forbear on this loan. The worst thing would be to somebody that just did a loan. That's the nightmare, is they just did a loan a month or two ago, and they're going to do a forbearance right away. Within anything that happens within 6 months of a loan, if a loan is paid off within 6 months, they come back to us, the lender, and say, we want our monies that we paid you back. And that could be, obviously in the billions, let's just say, in terms of all the loans written. So yeah, it's, there still is a lot of misinformation out there. Unfortunately but I think when people get their information based on their scenario, they got to check, double check, and triple check before they make a move.
It kind of makes me wonder that I'm always highly suspicious of, Congress it's not their money, so they don't give a
Yeah.
damn. So, so they just spit stuff out. So in other words, would they have been better off to just say, look, during these tight times, we are working with mortgage companies to find solutions. Call your mortgage company and see what type of assistance they can help you with. And then let each mortgage company and let the free market try and find a solution for their consumers, instead of saying, oh, you don't have to pay your mortgage for a year.
Yeah.
And I think they did the same thing with rent, because they said, look, if you're 90 days late on your rent, you can't be evicted. Well, you tell me how the hell we ended up with 1/3 of all renters in this country not paying April 1st rent, when really the lockdown was really only 2 weeks before, right?
Yeah.
Most of the layoffs, and I'm saying nationally, Washington State was obviously way ahead of us as far as people getting sent home from work and stuff. But 1/3 of all renters, because of a 2 or 3 week disruption. And a lot of the disruptions, the companies were sending you home with pay. So how much was there really that much disruption and that much interruption in pay? Or did people just hear this little bell go off that goes, oh, yeah, Daddy said I don't have to pay rent for 3 months?
That's the problem. There's a gap between the federal government and reality. And that's what people have. That's the whole that starts the whole misinformation thing. The government, it's like when the federal funds, they said, we're dropping rates to 0. It's BS. Excuse my French, but it's BS. a lot of people were calling saying, hey, I heard rates were at 0. Yeah, they put out this information, and there's a lot of misinformation out there. And there's, like I said, the gap between the federal government and the reality. Just an example, I know to get off topic here, it just, you and I talked about the SBA, the small business loans, the PPP program. I just talked to my buddy who we'll have a Zoom, obviously, conference, hopefully here soon with him, Ross Cole he works for a small SBA lender. I asked him last couple of days ago, I said, hey, are you getting money out, for these small businesses? He goes, no. He goes, not yet. Their company doesn't do it. So he's been referring out, but they're still trying to put the paperwork together and trying to figure out what they can and can't do before they get this money out. So
yet any site that you go on, any advice that you're getting says that you can get this money in 3 days.
Yeah. Yeah. They haven't even really gotten these bankers. He was telling me that Wells Fargo, they had it opened up for a couple hours and they were swamped with like 1,000 applications and they had to shut it down. It just, that's what kind of causes me some concern about this whole situation, is that they've got to get, there's such a disconnect. And that's why people see the media, they read, and then what they see and read in the media are totally different than reality. So, and that goes back to the mortgage market, they're talking about rates going up or down, or these guidelines, call, instead of reading it, call somebody that you can trust that is going to give you the right answer. Like from an agent, your standpoint, I feel like
it goes back to what I said in the video about, 3, 4 videos back on mortgage relief, is be prepared to be on hold for at least an hour.
Yeah.
Talk to them, write down who you talked to, write down what they told you, and then have them confirm to you in writing what they say they can do. Unless you have it in writing, it doesn't exist. So, and then
get everything in writing.
Don't worry about what you're hearing on the news, and don't worry, because a lot of the problems that they have is that, these programs get spooned out there, and then the lender's like, hey, you didn't run this by me. We don't even know how to prepare for this. We haven't, it's just like, here's a new program. And you get this many pages of of rules and regulations, and people expect you to be able to process it, the next day. And
Well,
even the $1,200 check we were supposed to get, what, 2.5 weeks ago or something, they're just now starting to drip out. And it doesn't happen that fast.
no. Well, it's kind of like, I mean, my analogy, I just thought about this, is like a car, GM comes out with a new prototype, clay prototype of a car, say, this is what the car is going to look like in theory. You're like, oh, that looks cool. But then, oh, we haven't built that yet. Sorry.
Yeah. The engineers are like,
really?
I'm
Really?
glad you could do that with clay.
I'm glad you could do that with clay.
Yeah.
I mean, but you can't do that in reality. It looks cool, but that's a totally
That's
different.
a great, that's Congress. You want to call them, go, I'm
yeah,
glad you can do that with clay.
Like, this is the way it should be. Yeah, they're clay.
Hey, by the way, are you the one that said that my renters don't have to pay any rent?
Yeah.
We really need to talk about that. I don't know how these landlords, there's no backstop. I don't know how this is going to work for landlords. And what scares me is this type of shooting from the hip can't go on for another 3 weeks.
No.
I mean, there's a lot of equity out there for homeowners. There's a lot of, but evidently it doesn't look like there's a lot of savings in the bank for renters. And if landlords are left stranded, it's not like they can go out and refinance all of their apartments or the homes that they have to rent. And when I look at our local MLS, our listings haven't changed that much. They popped up like 2,200 units the first weekend where we had trouble, and thought, okay, here it comes. And then I saw a whole bunch of price reductions, and now I'm no longer seeing that, because you know what? The inventory we have is up about 3,200 versus March 13th. So we're at 14,450 today in the Arizona of active homes on the market. And we're consistently seeing about 700 homes being taken off the market. People saying, I'm not going to try and sell them right now. So about 700. But we're having about 4,000 homes come on every week, and about 3,400 go under contract. So there's a steady on and off going. Buyer traffic's way down, but inventory is still down, but there's still steady trading going on back and forth. So it's not a brisk market, and it's not a dead market, and prices are not going up, but they're not going down yet. And in that mix, I'm seeing listings that say, and it comes with all the furniture, pots and pans and silverware. Well, what do you think that means? That means it was being used as a vacation rental.
Oh, yeah.
So I'm seeing more and more of those coming up.
Interesting.
Fully furnished.
And yeah, so that would make sense. That would make sense.
So
I know you do a great job of staying on top of stuff on that daily, MLS, numbers. And that's, I mean, a lot of agents, they just throw out something, but I know you're much more data driven.
Yeah, it's a data driven business for sure. And because people ask you, how's the market? Yeah, well, that's such a broad question.
That's like, yeah, somebody saying, hey, what are interest rates at? Well,
yes. Yeah. Here's what I can get in such and such state.
Yeah. But I mean, and to jump into guidelines. I mean, I will just say the guidelines, my note to people, if anybody's listening, number one, you're going to have to be patient. Things are changing. The time frame, the lenders are still backed up from the last 30, 40 days. With some lenders, I can get through underwriting in 1 to 2 days. Other lenders are 10 to 12, 13 days. So it does really affect, who you go through. You can go to somebody with the lowest rate, but that lender might be 90 to 120 days to get your loan done, versus picking a little bit higher rate, say 3 3/8, you go to 3.5. I might be able to find a lender that at 3.5 is going to get my loan done in 3 weeks versus 60, 90 days.
Yeah. Now you and I are in a deal right now together, and our broker had suggested that we write the contract for 45 days. And I called you and talked to you, and you said, well, I can get it done in 30. So when the agent countered back and said, we don't want 45 days, we want 30, we went ahead and agreed to those terms. and we got a good price, but we were a little nervous. In fact, we have in Arizona a thing called a COVID-19 addendum, which basically says, it's an addendum that says if anything during this transaction is interrupted by unforeseen events that are tied to the virus. In other words, what if they said nobody, you can only go into a house you own, or like California, they lock everybody down. Realtors can't even go into houses. Then we can cancel the contract. So it's an addendum. Buyers and sellers can both cancel the contract. So right now, though, we didn't have a problem. I got it inspected, and the inspector was able to go in, and nobody was there. And I was on my way, and he called and said, you don't need to come down and review this. There's absolutely nothing wrong with the home. There's like a screw is all we needed. And because of our client's down payment, you got the appraisal waived. So we didn't have any of those potential hiccups, like an inspector not being able to make it, or the appraiser not being able to go into the home, or not wanting to go into the home. So I can see where writing 45 days out is a good idea.
Yeah.
45 days or sooner. And I'm hearing some horror stories of loans taking as much as, like you said, 120 days.
Yeah, it's just, they're backed up. They don't have, and obviously now they're backed up, but also they're being, what's the word? Diligent. They're making sure that they got their job. They're doing there are a couple of things to look out for. They're verifying, usually before they used to do verifications of employment 10 days before funding, and a couple of days maybe, before docs, the docs go out. Now they're verifying before docs go out, once they sign, and before they fund the loan. They're going to call that morning, that day before or the morning of, to verify that the guys still, or the people still have their jobs. So on the side of guidelines, like I said, I've got a file in my email that just says COVID updates in terms of guidelines, because every day I'm getting at least a half a dozen, different tweaky little guideline changes. I pulled up a couple from this one of the biggest wholesalers that we work with. And just to kind of tell you, I mean, they are changing. They're tightening up the guidelines. They're raising, every bank has got a little bit different guidelines to a certain degree. I'm seeing on some of these mortgage sites that one banker says, well, we still can do 600 FICO score FHA, and some said we can do 580. I'd say buyer beware when you can go below 640, because once you see all boats rise with the tide, most lenders, if they start moving their FICO to 640, and if you got that one sheep out there that says, oh, we can still do loans 580 to 600, I would be buyer beware, because they could pull that program. You could have the loan going along for 3 weeks, and the last week before there's like, sorry, we're not going to fund the loan. So there's a lot of turmoil there. But this one lender, I'm just going through some guidelines. It said here, effective April 8th, the minimum FICO score is 640 for all FHA, VA, and USDA loans. Like I said, this is just for one lender, just to kind of give people a flavor of what's changing. The debt to income ratios are changing too. With this one lender, it says loans with a FICO less than 680, your debt to income ratio will be capped at 40%. Now, if you're above 680, it says they're capped at 40% unless there's 3 months in reserves are documented. And it says if 3 months reserves are documented, the debt to income ratio could be capped at 50%, could go to 50%. So another thing is too, with self-employed borrowers here, it says here, and this is what's coming out a lot, all self-employment income is reduced by 25% and 6 months reserves is required, or document that the borrower or business has at least 12 months reserves to use for full income. So,
Wow.
And then another thing is on investment properties, they're not allowing you to use the rental income to offset that payment. They want to hit you for the full payment. So let's see what else.
And that's even like for long-term rentals. So
yeah, it says here, right, borrowers cannot qualify with rental income, no gross rents, unless they are able to document 6 months reserves for each rental property using rental income.
wow, that's a game changer, isn't it?
Yeah. And here's another thing is here, this is just one lender, but once you have one lender, typically lenders kind of move together because, they get the Fannie Mae, they go off of Fannie Mae, Freddie Mac guidelines. And so they have a tendency to move all together. It says here, mortgage history. There can be no late mortgage payments in the last 12 months. And it says here, if a borrower is in forbearance, that loan must be brought current before closing. So another side note is Fannie Mae is actually doing their DU 10 I think it's 10.3 update this Sunday. I think it's Saturday, tomorrow. They're doing another update. They're probably going to be tightening up guidelines. They said in accordance with the COVID guidelines, and they said, I don't have the paper in front of me, but they said there might be a bit of a fallout from people that, with the new guideline, there's going to be some loan fallout based on the new guidelines. So they're going to tighten them up even further.
So
they're going to tighten them up real quickly. They're going to tighten them up. Nobody's got a crystal ball, but based on, I'm not giving you perfect advice like we talk about, but I'm just giving you what I've seen in the past, and you can only kind of go off of history. In this type of time frame, and I had this one client say, well, why are they tightening when they should be loosening guidelines to get more people? That they gotta cover their own butt. So they're going to tighten. This tightening might happen for another 3-4 months until we get some type of stability or see where we're going. Once we get a little bit more light at the end of the tunnel, they will start loosening up, because it's not their goal to just, tighten and have nobody buy homes. So they're going to tighten. They're going to loosen them up prudently. It's kind of like an accordion. These are not, like you said, they were loose. Not loose, but they're generous the last couple of years. And this COVID thing is really, they got to watch their own, because they're selling out the loans in the open market, and everybody's just basically tightening up. They will loosen these up. It might be 3, 4, 5 months down the road, but until we get past this, they're still going to be tight.
Well, everybody's in preservation mode right now. I mean, you're that way at home. You're buying things at the grocery store you'd never thought you'd buy again, like Spam. So everybody's in preservation mode, and investors especially. So I agree that it's going to tighten up now, because they want to hang on to what they've got, and they don't want to be putting out any risky loans. But you caught my attention on the forbearance has to be current before you can finance another home. That's a second home, you were saying, a vacation home?
No, it's just in general.
Just in general.
Just in general.
So if I've got, I took 3 months worth of payments and tacked it on at the end, and then 6 months from now, I get a job transfer, it doesn't count as a total balance due, or, I mean, how does that work? I owe 3 more payments.
You mean?
So I'm going to sell my house. Let's say it's worth 350,000. My balance is 300,000. I took those 3 payments and put them towards the end. My balance is still 300,000, right? I just haven't lowered it because I didn't make those payments.
Yeah, much. I would think so. Yeah. I mean, basically you're just taking those payments and putting them on the end. It just depends. There's no interest. There's not going to be any interest that's going to be involved.
Yeah.
But you just got to be current. So.
Well, we're definitely going to stay on top of it. I appreciate you getting on today. And hey, if anybody has any comments, put them in the comment section below, and please subscribe to this channel and hit the little bell dingy there. And so you can be notified whenever I add new content. And because we're going to try and get somebody on from the Small Business Administration next week, so we can chat a little bit about what that process is like, and actually talk to some boots on the ground, because what we're reading and what we're seeing and what we're hearing, may not be reality.
Yeah, no, it's definitely the case. And I'll leave you with this. I mean, basically, the market, a lot of people are just sitting tight. Bottom line is just have patience. Don't call your lender and say, well, I didn't need this some time ago. Things are changing. You got to look at the time frame we're in. Just take a deep breath, and we'll get through this.
Yeah, I think on that note, it seems like every other day my conversation is, yeah, you were right, but that was last month.
Yeah, exactly. Yeah, exactly.
All right. Well, have a
good
great weekend. See you. Happy Easter.
Thanks much. Take care. Same to you.